Example 1. A home renovation loan application. You're a banker at a local bank in Cleveland, Ohio. A customer named David Ball arrived with a loan request for home renovation, has a student bank account in your bank, and was advised by a friend to seek this loan. He has filled out the application form and you have conducted a face to face interview. He is 27 years old, has completed his schooling, and is now working as a cashier at a retail store in the city for 4 years. The house was built by his father 30 years back and is in decrepit condition. His present salary is $30,000 annually and wishes to borrow $12,000 for 3 years. He has estimated the total cost that will be required by him is around $20,000. The rest of $8,000 will be provided from his savings. He had also taken a car loan of 10,000 US dollars 3 years back for which he has paid fully. Now let us apply the 3 C's framework concisely to David's case. Character. On basis of the face-to-face interview and credit reference from his account, the character appears to be good. He is a local to the city and appeared very humble and responsible during the interview. Moving on to the next C, that is capability. He had paid the previous loan in time, which was almost equivalent to the amount that he has requested now, which proves his reliability and credit worthiness. He has also been saving some money from his salary. He seems to be a responsible customer. This gives him a right tick in capability. Capital. He is a young man and doesn't have huge savings but earns a decent amount of money. He owns a car that he had previously financed through the bank. Also, his expenditures don't seem to exceed his earnings. This brings us to the end of the 3 C's analysis where David has scored pretty well. Now moving on to SMART analysis. Security. This does not apply to short-term personal loans, and there are no regulatory or identity complications here. Motive. The motive of the loan is sensible, as the house he has been living in is old enough and needs renovation. Amount. The amount he has requested is reasonable. He is also making a contribution from his savings, which is encouraging. Repayment. Through an exercise on income and expenditure during the interview, his earnings seem to be going in hand with the repayments that have been planned. Term. The term of the loan is standard and acceptable. The value of the house can be assumed to increase after renovation and inflation as time passes. This completes David's SMART analysis, and he seems to be a good borrower and a potential future customer. The loan can be approved for him.